Hello, 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 and welcome back to the Foreclosure Deals Coach podcast. On this show, we're going to discuss where the market recovery is potentially going to come from. Interest rates aren't coming down, so can we salvage the market with consumer confidence? This is going to be a great show. Stay tuned. Hello, hello, and welcome back to the Foreclosure Deals Coach podcast. This is a show where we discuss how you can find, figure, fund, fix, and flip a foreclosure deal using the foreclosure profit system. We'll pop that up right here. I am your host, Donnie Corum, the Foreclosure Deals Coach. And we like to go over some stuff on each and every single show. But first, it's an incredibly blustery, wintry day today here in Colorado Springs, Colorado. I'm looking out amongst my balcony. We got snow flying sideways right now. So very cold out there. And I would be totally remiss if we didn't just take a moment to mention the terrible tragedy that happened with American Airlines flight out in DC, combining with what it sounds like a Black Hawk hospital. So I just wanted to, pray for the families involved in that and just offer a quick moment of silence for the people who are wondering if their loved ones are okay. This is a very terrible tragedy. I'd certainly hope that things work out as best they can in this situation. So we're just going to do a quick moment of silence and prayer for them. Okay, let's hop back in. What a terrible situation. I do hope that there are, some survivors of that crash, and obviously you never want to hear about something like that happening. But it does happen, such is life. So let's hop into the show today. Trump has taken over office here in January, so a lot of executive orders have passed his desk immediately. And I don't know if you watched the inauguration day. I certainly did. But one of the cool things I thought he did was they start doing the executive orders on day one. He started making some sweeping reform changes. We jumped out of the World Health Organization. That was costing the country a ton of money. There was something that was the Paris Treaty Act. We pulled out of that. Rough savings on that is roughly $1 trillion, right? A lot of talk about how Trump is going to undo the wrongs of the previous administration, at least as it relates to the financial industry. And, obviously housing came up a couple of times. What are we going to do about the affordability of housing? A lot of people are in trouble right now. And one of the things that really stood out, if you do a little bit more research, is that recent defaults on foreclosures, like houses that have only been owned by their owners for a year or less, are seeing one of the highest foreclosure rates we've seen in a while. And they credited that, and I would totally agree, that it isn't just the mortgage payment that's getting people right now with the higher interest rates that have actually started when these people got these new mortgages, right? They were already in the 6s or 7s, but the default rate is coming from the fact that everything else in people's lives is a lot more expensive. And we're going to take a quick segue here. This show is brought to you by DealCheck, because DealCheck is the app that we use to analyze properties and make sure that when we're buying a deal, it's going to be the right deal for us. So if you want to check out DealCheck, go out to ftcdealcheck.com. You can use that link and put in the code DEAL to get 20% off of an annual membership. A lot of investors now rely on the DealCheck application. My team does in particular. Anytime we're working up an analysis on a deal, we utilize DealCheck to make sure that all of our relevant data is in one location. Some investors try to get by with using spreadsheets and putting together some workflows and et cetera. I have found that the DealCheck application has been game-changing for myself and my team to allow us to consistently analyze deals and provide all the data that we need to present it to our clients to buy it, but also to the lenders that are going to fund the deal, the contractors so they understand the budget, and the agent even to help define what we're going to sell the property at later, so we ultimately know what our profit is before we even start on the project. Predictive analytics is critical in the investing world, and DealCheck certainly makes that easier to do. All right, let's hop back in here. So we have we have to figure out how this thing is going to turn around. If interest rates are high, people who have just gotten a mortgage are already defaulting. The question on everybody's mind right now is if interest rates are not going to drop. And just yesterday, it was announced, I'm sure you saw that Powell announced at the Fed that they're going to be suspending future interest rate drops for a while for fear that they don't want to go back to the inflationary times that, kind of, I don't want to say cause this problem, but if you recall, we were down to 2 to 3% interest rates for several years in 2020 and 21, the direct byproduct of printing money. And what happens when you print a bunch of money to offset the COVID crisis? The value of the dollar drops drastically. That's what happened in this situation. And the result was everything got way more expensive, right? So to curb that, they increased interest rates drastically in 2022. And as an investor in that market, I can tell you with certainty that it certainly felt like an overreaction to the times. I'd love to hear your comments on that. Yeah, thanks, Kim. I agree. Housing affordability is a major problem right now. And so people have to look at what we're going to do to flaze that. I'd love to get your ideas, Kim. Kim Gold is on the show today, guys. And if you don't know Miss Kim Gold, she is running for City Council District 6. We're so excited to have her running for office. We're going to have you on the show sometime, Kim. So I do hope you can stay tuned. One day I'd like to talk to people about your plans for your potential district with City Council. I think it would be great for the fit. But yes, housing affordability is a huge problem. And the only way to really impact housing affordability is government interaction. Like Trump's general attitude has been laissez-faire economics. Laissez-faire, for those who don't know, means we're going to let capitalism figure it out. Right? We're going to let the ebb and flow of money figure itself out, which actually is generally the best practice, in my opinion. Okay. Yeah, the more the government gets involved, the more interaction they do, the more things tend to get imbalanced, right? And then they have to be corrected later. That's what really happened here. The government got heavily involved because of COVID. They printed a bunch of money because of COVID. The rates dropped to abnormally low rates. Right. And then suddenly the price of everything went up. I remember we were selling houses with appraisal gaps. You remember this? An appraisal gap was when people were paying more than the house appraised for by the bank. When they were getting a loan, they sent an appraiser out. And let's say, for the sake of numbers, the bank said, okay, the appraiser said the house is worth $400,000. They were selling for $425,000, $430,000, and the buyer had to bring in the gap, the appraisal gap, to fill that in. It's a crazy thing, right? And that nothing, and never was that more true than in certain more affordable areas, like where Kim Gold is running for office, like the southeast part of town, where houses were, extremely affordable. One of the less expensive areas to live in Colorado Springs, Colorado, which is a blessing, right? We have to have these affordable areas for people to live. But they saw one of the biggest increases during that rate increase because affordable became less affordable quickly as people's buying power went drastically up. So we're looking for an answer. How do we make this better? Well, if they're not going to drop interest rates, and right now the Fed chairman Powell is saying that we're done with interest rate drops for the foreseeable future because we don't want to get back into this inflationary economy, then the next step is going to be consumer confidence. Well, what creates consumer confidence? A lot of that happens at the government interaction level. When the people don't feel well represented, if they don't feel like somebody's looking out for their best interest, which unfortunately has been the case in a lot of cities and towns and segments, but none more true than the district that Kim is running for. And I'm glad you're here, Kim, because they found a lot of great material to kind of swoop you in here. So that's pretty awesome. But if there's lack of representation, the people will perish. And that's really what's happening, especially in some of the more affordable areas. So to turn this around, we have to give people the confidence to believe that the market's going to turn, jobs are going to become stable, prices are not going to continue to increase, and that's going to bring people back to the market who want to own property. Well, I can tell you this, since Trump was officially put back in office, we have seen a substantial jump in consumer confidence. And that's being reflected by I know you are, Kim. Thank you. That is being reflected by people realizing that the prior leadership, this is not a political show, okay, but the prior leadership was not doing a good job representing the people. A lot of special interest groups, a lot of stuff was happening. This happens in every regime, every presidency has this. So we're not just going to say Biden was a bad guy, but we can say with some degree of confidence that a lot of people lost their confidence in the future of the American economy as a result of the Biden regime, right? So what we're trying to figure out now, right? Is that it's right. Is we're trying to figure out how do we get that confidence back up. And I do believe that the current leadership is taking a lot of great steps that are making me feel better, right? Making me feel better about the future of the economy. And that's going to trickle down to everybody out there who's going, is now the right time to buy a home? Well, if you're a real estate investor, which this show is all about, you want to know that if you buy a property, fix it up, and then go back to the market to sell it, that it's going to sell within very close range of your target sales price based on market statistics, not fairy dust, not hope, but rather what the market's actually trading at today. And actually, we are finding that we have to price the homes a little bit below what we believe the current market value is, because there's a need to build in the agent commission that was not a discussion point before. Remember that in the past, we had the 3% commission was just kind of assumed for buyer's agents. It became part of the culture, if you will, and it was built in. Unfortunately, and I love my buyer's agent folks, but guys, that's part of the problem, right? Is the assumption that if you sell a $400,000 home, you're immediately entitled to $12,000 commission for that. Well, I'm not saying there are not times where that's warranted. What I'm saying is making that assumption became very dangerous to the market. As you know, in 24, they decoupled agent commissions from the equation, meaning we couldn't define what the commission rate was going to be. That immediately, we didn't know at the time, but that immediately devalued the price of every property by roughly 3%. Now it's a negotiating item. And to be frank, we're negotiating for less than 3% on the buyer's agent commission, sometimes 2.5%, sometimes 2%. And honestly, on our flips, we're really encouraging our sellers to offer no commission to allow it as a negotiating point for later on. Okay, so when you're buying the property, if the agent wants to get a commission because we've taken it up the purchase price, we now have some room between the appraised value, what a house will come back on appraisal, and what we're selling it for. And if the buyer loves their agent so much that they're willing to pay 3% or even more to that agent and then amortize it over 30 years, which, as I say that out loud, sounds absolutely ludicrous. Okay, but if the buyer loves their agent so much that they're willing to pay that, we can negotiate that in there. What's actually happening, though, is we're paying less and less commission, and really, in a way, we're paying no commission, which means our deals should be more profitable. Even though we're listing them for less, we can factor out the cost of the buyer's agent commission. But none of that's going to matter if consumer confidence does not return to some semblance of normal. Okay, and normal means that the American dream is alive and well. People want to get a piece of the land they live on. They don't want to throw their money away on rent. They want to benefit from the long-term appreciation. In Kim Gold's district, one of the things I'd like to tell the story of is when I started out in flipping, which was about 2007 and 2008, that neighborhood, the southeast part of town, was a very depressed part of the neighborhood, and that goes way back. If we go back to when Pikes Peak Park was formed, it was what was called a red line district, and that basically means there was racism attached to the area that basically said this area is where we're going to put the minorities, and we're not offering government loans into that area. Well, if you can't get FHA or VA loans in a certain neighborhood, then it gets very difficult to compete in that in the other parts of the neighborhood. But that's how it was. Pikes Peak Park was a red line district. Okay, so a lot of people bought homes in there, and you're talking about homesteaders, people who struggled. They saved their pennies. They worked very hard to put together what they could, either buy the home in cash or do what was called sharecropping, where they basically had a savings and loan. They worked together to create their own banking system to eventually be able to buy a house with the banks, but they had to create their own banking to get that done. Can you imagine that? Well, that was a real world assessment of something that happened right here in Southeast Colorado Springs. And people, they forget, okay, that this, like every community in the country, there's a lot of racism right here in the Colorado Springs community, but a lot of it was centered around the southeast part of town. And as a result, the appreciation did not keep up with the rest of the city. Obviously, in the 1960s, 1968, the Fair Housing Act made it so that was completely illegal. Okay, and loans had to be given and distributed normally, which is obviously what needed to happen. But it caused a massive ripple effect that has carried over for nearly 100 years later. You're still dealing with the fact that that area is kind of depressed. It's a lot more minorities per capita in that area, and they don't have the representation that they have. So bringing on people who see that vision and can understand that we were starting at a deficit. Okay, the culture started a deficit in that area, and taking steps to fix that becomes a critical element. From an investor standpoint, I was buying deals in Pikes Peak Park way back in 2008, 2009 for $80,000, $90,000. We were spending $20,000 to get them fixed up, which was a lot of money back then for me, for sure. And then we were selling them for 140 or 150. And to be frank with you, I couldn't build them fast enough. And everybody was talking to me and going, why are you investing in these crappy little neighborhoods? Well, first of all, that's where the most help is needed. Okay. And the investor mantra is not just about making a lot of money, but it's about turning neighborhoods around that can't turn them around on their own. This is a huge opportunity for investors, and that opportunity remains today. There are still at least some of the least expensive homes in the city are located there. You also look at other depressed areas like Fountain. That's come a long way in recent years because of Fort Carson and a lot of the soldiers wanting to be in that area. That was a very affordable district. It's not that affordable now, but what's really has to change now is consumer confidence has got to come up, and you're going to need proper representation in that market, which is why, real estate investing is not just about the dollars and cents, but it's about the politics of all of it a little bit too. So I have rallied behind candidates like Kim Gold, Roland Rainey, who's running for an Eastern District on City Council. We're looking at not only the desire to change these neighborhoods or help promote the growth, but how the people need to be empowered to do that. Okay. And so getting that consumer confidence that, yes, it's a great time to buy a home, because it's always a great time to buy a home. But as I end every show in, you don't want to buy a house, you want to buy a deal. Okay, but most consumers don't know what a deal looks like. Others don't want to do the work, and I totally get that. The idea of buying a home and spending $30,000, $40,000, $50,000 seems completely far-fetched to most people. But I encourage you, if you're watching this as a renter, a non-homeowner yet, and you're wondering if now's the right time to buy a house, the answer is absolutely, but you really want to focus your efforts on buying a deal. And I think if there's proper representation, one of the things that really bugs me about Kim Gold's district is some of the areas don't even have sidewalks. They don't have curbs. Right? I mean, when city planning was taking place, were they comparing? I grew up in the Briargate area. Okay. So I was in the northeast part of town. A lot of people, when I was growing up, because I hung out with a lot of people in the southeast. Okay. They're like, well, you live in the rich kid district. Well, I mean, by comparison, I did. My parents, both military, worked very hard to get us out of the challenged neighborhoods. But when you look at why those neighborhoods are challenged, it comes down to improper representation, right? And so I really want to see people like Kim get in there, thanks, Kim, and change that around to understand that we all deserve to benefit from the economic benefit of what real estate investing can do for any neighborhood. But the first step is at the top level of government interaction, the very top level. You have to give people confidence that the country is not failing, that the world is not going to change that much drastically, and that we can get back to normal business. And unfortunately, when the country is being fundamentally operated by special interest groups, which a lot of people felt like was the case, that the list of people who were pardoned on the way out, on Biden's way out, is staggering. How many people got pardons? And although that's fundamentally true of each and every president that's out there, it was really painful to look at the fact that I just don't think that we were well represented for the past 4 years. As we look at the next 4 years, what I encourage you as an investor to do is try to put the fear behind you and look at statistics. What's great about the foreclosure profit system is that we help to analyze, we find deals for you. Okay, that's a big thing. We find deals right there here in the market or wherever market you happen to be in, but we're really working in Colorado, and we're looking at putting a hub in the Arizona market here pretty shortly, okay, because we're tracking foreclosure activity heavily in that area. We find the deals, we analyze the deals during the figure stage. We fund the deals, and I'm a hard money broker with Traction Capital, so I can help you to get the capital that you need to do the deal. Then we fix the deal with our list of contractors and our project management team, and then we flip the deal with our team agents so you can pocket a minimum profit of $25,000 and hopefully a lot more. And as great as that feels to make money with real estate investing, what's even better is that you're changing neighborhoods that are going to need the help. If we allow these areas to just continue to be overrun with foreclosures, which hasn't happened yet, but I am living proof of what happens when it does. Okay, when there's a foreclosure on every corner of Pike Pikes Peak Park, it really struggled to get any sort of traction in seeing an appreciation that people need to build wealth. And that goes for every race, creed, color, and everywhere. Wealth building should not be limited to one class. It should not be limited to one set of people. It should allow for everybody who wants to invest either in their own home or in real estate in general to fix and flip it. You're turning neighborhoods around. You're creating lives. You are building wealth at a very high level. Today, I am proud to say that Pikes Peak Park went from a $80,000, $90,000 neighborhood when I was flipping homes to I took that from 150 to retail to 250 retail. And then we went from 250 retail to 300 and then 300 to 350. And today you can't get a house in Pikes Peak Park or pretty much anywhere in Colorado Springs for under $400,000. And the investors are the ones who made that change because they took the properties that needed the most help and they fixed those homes. They brought them back into great conditions so new families would move into those homes, and new families of all races, right? Instead of the redlining district of the past where we were limiting it to one race being put into a community, now everybody lives in Pikes Peak Park. It's a beautiful neighborhood, not all of it, right? But there are crappy parts of Briargate to this day, right? I drive through Stetson Hills that I owned a home in for a very long time, and I see crappy parts of Stetson Hills. So not all of it's pretty, but a lot more of it has come back around by bringing in pride, and that comes from consumer confidence, people wanting to invest in their neighborhood. It starts at the political level, and I believe that the current regime, Trump in office, is going to help with that quite a bit. It's not a political show, but that's really how I feel. And then with other city representatives like Kimberly Gold, who joined us on the show today via text, thank you so much for being here, Kim. Getting in there and shaking things up to try to make a difference. I fully believe the future is very bright for the Colorado Springs real estate market. It's a matter of stepping in there and really making a profit. If you're interested in learning more about how to get started in real estate investing, I encourage you to head on out to foreclosureprofitsystem.com. From there, you're going to get a video where I'm going to explain how the entire system works, how we find, figure, fund, fix, and flip deals. You will then schedule a one-on-one call with me. We will discuss if this is the right fit for your financial landscape. I'll be frank with you, real estate investing is not for everybody. And I don't care what the gurus or pundits tell you out there, the guys trying to sell you something. Yes, I certainly charge for the system, but I only charge with people who I am confident I can provide a result of making a profit in doing fix and flipping based on your economics, your desires, your time, etc. If this is the right fit, I would certainly like to work with you to see if this is if we can make some money together with that program. So that's our show for today. We got a little more political. Currently, of Miss Kim Gold showing up today. Thank you so much. Honored to have you. Let's get you on camera next time, right? I'd love for you to talk to the people, tell them a little bit more about your plan for turning around that district and helping families to build wealth in that area amongst all over Colorado Springs, Colorado. With that, this is Donnie Corum, your foreclosure deals coach, thanking you as always for tuning into the show and reminding you now and always, don't buy a house, buy a deal.